Well, if it isn't all of you and us here, and if it isn't St. Patrick's Day. Robin, let's put the camera back on Robin. Robin, where's your green at, man? St. Patty's Day, bro. You got green socks? You got green underwear? No, we don't want to see the underwear. It's just...
No.
Shame on you. I will pinch Robin after the show. What's going on, guys? Welcome back. My name is David. I'll be one of your co-hosts. And today, like every day, we're coming at you live from our studio here in Las Vegas, Nevada. We have a fun show for you guys today. Exciting, fun. We got some big news from Polygon. We got some big news from Arbitrum, already getting major exchange listings before the tokens even dropped. Also, we have some testimony from the Secretary of our Treasury, Miss Janet Yellen. She was getting yelled at the Senate hearing. Let's hear what she had to say. We also, of course, have our main man, Forrest, joining us to look at some charts, look at some metrics. It's going to be a fun one today. And I'm also very excited because one of our community members is joining us on our studio couch. We got our main man, Big Swole, up in here. We always love it when our community comes and visits us, hang out with us. So if you're a Vegas local, or if you find yourself coming to Vegas and you're not a weirdo, we would love to have you stop by the studio, hang out with us. Who else is hanging out with me? Well, it's Big Rob.
Hola! It's your boy, Big Rob, back in the house. Welcome to Sin City Crypto. If it's your first time checking us out, we're an entertainment-focused cryptocurrency channel where we take old, boring, and stale information and package it up in a fun and sexy way. Cryptic Mushroom says I look tired. Cryptic, you better watch out because your boy coming in with the heat. All right? I'm coming in with the heat today.
I was looking at the camera. I was like, we both look kind of high.
Yeah.
No, we're not.
Nah. We were up late night getting some grilled chicken pho, which is amazing, by the way. Now, if you're new here, say hello so that way we can give you a shout out. But before we do anything, we gotta pay our homage to the price of Bitcoin. Over 26,500. I think it even grazed the 27,000 mark. You know what else graces? Cattle. That's right. Let's get the bull sound, baby. Rock out.
Oh, you brought the bull sound back. Okay. That's what you were doing for an hour this morning. I was like, hey, Rob, what are you doing? Can you do this? Oh, no, I'm busy.
Yeah, we got to get the bull sound effect back. So,
you know, Robin, in the age of AI and in the age of robots,
yes,
we assumed there was going to be a lot of weird things happening, right?
Okay.
You let your mind wander. You don't have to.
I'm sure this is going somewhere, but okay.
We are literally, I'm a little nervous for what my kids are going to have to grow up to, and your kids and everyone's kids in here that has kids. And this is why.
Okay.
So we'll let the video speak for itself.
This is my and Emily's little boy, little Shawnee Jr. Isn't he so cute? He looks just like me, don't he? Yeah, him looks just like his daddy. We made a beautiful kid. Emily, we did it.
And this guy worked at the Silicon Valley Bank.
Yeah, it's interesting.
Yeah, I'd love.
Can't you marry inanimate objects in like certain areas? Is that a thing? Like you can marry a shovel or something? Like,
I think so.
There was a show on Netflix called My Strange Addiction, and I thought I'd seen it all, but I haven't. Anyways, so that was fun. You know what else is fun? Kim Jong-un is fun. No, he's not fun. Sorry, I take it back. Kim Jong-un is funny. Because this is what he makes his bodyguards do. So this video is Kim Jong-un's private bodyguards jogging in suits alongside his limo. So usually, you know, here in the U.S. and other countries, you have whatever cars the president's in or the prime minister, and then you have other cars with the security detail just driving behind them. Not North Korea. Not North Korea. They stay in shape. They stay in shape. This is... I don't know why it's so funny, dude. Like, this is not practical. What are they doing?
And you know, the video is being slowed down They're actually going under 10 miles an hour.
Are they?
Here's the thing. I feel like they're ready to take a bullet for the car, like because the car is probably bulletproof, and so
They're like triple bulletproof in the car.
it's like an extra line of defense on the car.
Interesting. Yeah, if you are gonna apply for a job as Kim Jong Un's bodyguard, just be ready to run. Also, so this is the Three Stooges explaining pretty much how our debt-based fiat system works. This is from Carl B. Menger on Twitter.
Speaking of money, how about the $20 you owe me?
Oh, yeah? Well, I only got 10, so here's 10, I owe you 10.
Thanks.
Hey, Mo, you owe me 20.
Well, here's 10, I'll owe you 10.
You owe me 20.
Here's 10, I owe you 10.
Here's the 10 I owe you.
Here's the 10 I owe you.
Here's the 10 I owe you. Good, now we're all even.
Speaking of money, how about the 20?
If that ain't the truth, I don't know what
that
it
is spot on right there, bro.
It's kind of sad, right, that we're laughing about it.
Yeah, that is. I think that 100% explains our banking system.
I also have something else about the banks that's pretty funny. So this next video is compliments of JP Morin Chase, Morin. And this is banks taking bailouts in 2023.
That's what it looks like when Rocco brings pastries to the studio.
Oh, and it's gone. Oh, we have I don't even know how to pretext this. I don't know how to how do I set this one up? I don't know. I'll just show the picture.
Well, right, yeah.
Anyways, so as
They're in love. They're in love.
yeah, tender loving care.
Mm.
Rob, let's take a quick peek at what the markets are doing, and then we're gonna bring our man Forrest on. We're just gonna jump right in.
All right. So taking a look, we have Bitcoin coming in at $26,497. As we said earlier, we were testing the $27,000 range, which we'll get the full breakdown here in a little bit. And let's see here. Yeah, we were as high as 26,967. So right there, the $27,000 mark. As we've alluded to before in earlier episodes or earlier this week, that historically, we haven't had much support or resistance on the between 25 and 30,000, and so I'm really curious to see if we'll go straight there. I feel like there is a ton of bullish momentum pushing us in that direction. Not to mention tons of bullish printing as well. Did you hear? You printed like $300 billion.
300 bills.
Are we going to discuss that in our show today?
Robin, I'd love to discuss that on our show today.
Okay, beautiful.
We're gonna discuss a lot of things.
Wow, that's a
yeah.
great analogy.
Thank you.
Okay, cool.
Thank you very much.
All right, so taking a look, we got Immutable X up 21%. Then we also got Stacks up 21% as well. And
Stacks is just not stopping.
Stacks is up 83% on the last week, man. This thing is ripping. So from 50 cents all the way up. Let's see here. This thing is
Go to the
a
3 months?
monster. Yeah. Good Lord, man. This went from 30 cents to over $1.
In a bear market.
In a bear market. And this ain't from the bottom. Remember, the bottom was 20 cents here. This was the beginning of the year. This is kind of where Bitcoin was at 16,000. Sure, 20 cents. But going into February, halfway through February, we're still at 20 cents. Solid 4x from there.
You can say it started from the bottom and now it's there.
Rocco, can you please get some trombone or something on here? Thank you, appreciate that.
Is that a trombone?
That is a trombone. So
I really didn't know.
all right, so Ethereum is well over the 1,700 mark as well, and then also we have who's the some losers today? We got Maker, Dow down, Kava as well. The Graph has pulled back 1%, but Graph has had a nice solid pump this week, over 30% for the week still.
I started looking into SSV, man. That's an intriguing one.
Yeah.
They do they deal in ETH staking. Yeah, ETH staking, but they do it differently. Not coming to me, but
And then just the visual representation, everything in the green. Everything in the green. Mina Protocol's up 8%.
wow.
Mina Protocol's up from 60 cents to 80 cents, I think it is.
Mina, the lightest blockchain in the industry.
Everybody claims the fastest, the lightest, the
No,
strongest.
they're literally the
securest.
lightest. No, you can literally
Like, have you tried to pick it up before? All right, we got Fear Greed Index coming in at 51, and the stock market is slightly in the red.
We've decoupled.
Did we?
Okay, all honesty though.
Was it?
All honesty. Fed turned the money printer back on. The crypto markets did what they were supposed to, which, but the stock market didn't. So, what is the narrative that's pushing the price of crypto and Bitcoin up?
Perhaps it's the failure of the banks, uncertainty that if you use the banks for the foreseeable future, that all is well. Because I think there's just a lot of uncertainty on what's going to happen if large banks globally start going under. Because both scenarios are bullish for crypto, right? Think about it. Scenario one, let's just say we have an international global cryptocurrency, or not crypto, banking meltdown, right? Scenario one is you bail out the banks, you print tons of money, and you inject capital into speculative markets, crypto rallies. Two, the banks fail, people look for a safe haven, they go to Bitcoin. Right?
Yeah.
I mean, option one or two is good for crypto. And so as we see these massive volatility periods in the banking sector, tons of uncertainty, all of the FUD that we're usually used to in crypto, that FUD pouring over to the banking system, think about it. You're either skeptical on the banks and you're starting to eyeball other options, the private sector, crypto, or you feel confident that the government's going to bail everything out globally, internationally. They're just going to print tons of money. And we saw what happened last time that happened. 2021, maybe all over again, right? Same. Now, I do want to give a little shout out to the chat. If you're new here, say hello so that way we can get an hola back at you. We have Edward Freeman up in here. Also, we got TFP, Ivan Hernandez, and then also Alex Koo. We have Crypto Dave in here, Pave Cleaner as well, Crawler.
Pave Cleaner.
Yeah, Pave Cleaner, yeah. Wonder what he does for profession. And then Tony C. To all of you, hola! Welcome to Sin City Crypto.
I'm putting an APB on Jimmy and Crypto Billy.
They not here?
Where are you guys? Are you cheating on us?
I will look to see if they're in another chat.
No, you do that because
Who
I'm
else is live right now?
Go check because I'm bringing on our guests. So Rocco, let's patch.
Who else
Forrest.
is live?
Okay.
Yeah, you do something. What's up, Forrest?
My man.
What's up, guys?
How you doing, brother?
Pretty good. Can't complain. How about you?
Good. You wearing any green today or what?
I forgot it was St. Patrick's Day until
What is going on,
an
guys?
hour ago.
You, Robin, Big Swole, just me and Rocco over here celebrating St. Patty's Day.
Mm.
Okay, just go
I
have a
don't
green
have
beer when we're
green
done.
nearby.
What?
Yeah,
Well,
I'm gonna
the
have
picture
to
behind you is kind of green, and it looks like it's
Yeah, a
part
little
of.
bit.
Okay,
Greenish
we'll
blue.
take it. Rob doesn't get any credits. You do. So, Forrest, first and foremost, thank you so much for joining us. Second most, I want to ask you about what are your thoughts of how this whole banking thing played out? We've had a few days. There was rumors that, obviously Signature Bank got taken over. They came out over the weekend and said, yeah, we saw a run on deposits, but those started to dwindle down and we were ready to open back up on Monday. No problem. Problem was FDIC went in there, took them over, said systemic risk. Everyone was speculating. You had one side saying this was a attack on crypto. because of, obviously the Signet and they're a crypto-friendly bank. Others are saying, hey, we shouldn't blame crypto because if anything, they helped us because companies like Coinbase, like Circle, like Gemini had money there. So essentially they helped bail those companies out because if all that money would have been stuck from Coinbase, from Gemini on Signature and they went under, could have been really bad for the crypto industry. What side of the fence are you on? Was this a direct attack on crypto or do you think they had reason to go after Signature and not anyone else?
I'm in the camp that it's not necessarily binary. It's probably a little bit of both. Could the short-term side effect be that crypto's Coinbase and some of these companies have essentially been bailed out a little bit? Yeah. But I mean, ultimately, if you look at SVB and Signature in particular, and the fact that Signature, it didn't seem like Signature was actually going to go under. They could have stayed open, and the fact that they just closed it down, that does look like an attack on crypto. So it's probably a little bit of both, but I lean a little bit more towards that this is likely an attack on crypto to some degree. And I think ultimately they're just trying to slow it down, right? They know they can't stop it. I don't think that they're going to ban it outright, but I do think that they know they're very far behind. They want to develop a CBDC solution, and anything they can do to slow down the industry so they can catch up is what their MO is essentially.
Did you see the Reuters articles saying that a source told Reuters that, in selling or auctioning off Signature, one of the preconditions was you have to let go of all the crypto dealings, right? Signet's got to go bye-bye, no more crypto.
They've said that was fake. That was fake news.
Of course they said that was fake. So my thing is, what reason would have the FDIC have to lie versus what reason would the source have to lie? Right?
I don't believe it, man. I think,
You don't believe that?
No, I don't think that there was a precondition that, this is a federal, this is another.
Reuters is one of the.
I understand.
Okay,
I know who Reuters is. I'm just saying
they're not some hinky-dink little news.
Okay,
yeah.
Sure, they're not rinky dink.
Well, all mainstream media is rinky-dink, but out of all the rinky-dinks, they're the leastest the rinky-dinkies. The word salad.
So, anyways, no, man, that's all. That's now. Was there some kind of intent behind Signature Bank getting closed because of their close proximity with crypto? And they were saying that the reason they closed Signature was, well, what was the reason they closed Signature? They said they
systemic
had
risk.
Systemic risk, and maybe crypto had baked in to that some way or shape or form. I'm sure whatever investments they had or whatever money they did or whatever business model they had into crypto, the profits from that sector, I'm sure, are down. And so is there more risk in their business model now for the simple fact that crypto is down or down as much as it was from its all-time highs? Sure, I think so. But to say, hey, we closed a bank that's been around for years for the simple reason that they touch crypto, I think it's a reach. I think it's a factor, but it's not the primary reason.
I can't. I just, I was gonna wait for a good segue entry. I just can't hold on to this for much longer. So Silicon Valley Bank got a bailout, right? What's the point of a bailout, right? Why would a company need a bailout? Forrest, why would a company need a bailout?
Yeah, so they were probably going to go under. Well, they're definitely going to go under, but then the depositors were at risk of not getting their money back.
They didn't give any money to the company.
I know, but I'm saying
it's only to the deposit. They insure the deposits.
The point of a bailout is, hey, we're on the brink of bankruptcy. We're on the brink of going under.
No, they didn't give a bankruptcy. What they did was they gave a loan to the company to back up deposits. They didn't physically. They didn't give them a bailout in the style of 2008 where they injected capital to the company.
I know that. I'm just saying. But the point of a bailout, right, to give money, and whether it's this scenario or whether it's another scenario, the reason you get a bailout, whether it's from the government, whether it's from your investors, is because you're trying to stop from going under. When I say, hey, mom, I need some money or else I'm going to lose my house. And then she gives me the money and I still lose my house willingly. That's some BS, right?
So where are you getting at this?
I'm getting at Silicon Valley Bank.
They didn't get a bailout. They did not receive a bailout. The company itself didn't receive any money. So if you're saying, hey, why did they receive a bailout and they're going under? They didn't receive a bailout. They just insured the depositors. Instead of having the limit at $250,000 for FDIC, it's infinite. But no money went to the company. So the company still had tried to sell their bonds, or they sold their bonds at a loss, the company. They also tried to sell a bunch of shares. They diluted their shares by 30%, which caused a massive sell-off. So the company itself is in a horrendous shape. And that money that they got lent was essentially just to cover the withdrawals. That's it. That's all it is. It's not a bailout. They didn't give any money to the CEOs. They fired the CEO, and anybody that held the stock, probably that's going to zero. If not, it's already there realistically. And anybody that has ownership in the company is toast. Especially when you can't liquidate any assets because those are customer funds.
You don't have to liquidate assets because you drew on a line of credit from the federal government. That was the whole point.
They didn't draw on a line of credit from the government. The government backed the depositors.
The government? Okay, but how though? How, right? The government comes in and says, okay, don't worry about selling these 2-year, 5-year, 7-year notes at a loss. We'll take them, we'll lend you the money, and then we'll keep them, we'll hold them to maturity, and then when it gets cashed out, we'll take the money back. That's how they're going to repay the Fed. That's what they did. That's where that money came from. But now, Silicon Valley Bank has filed for Chapter 11 bankruptcy, which is funny because 2 days ago, you remember that letter we shared on the show? Oh, bring your deposits back. We're fully insured now. We're good. Do you remember me sharing that 2 days ago?
Yeah. Well, that's a company
And here we
trying
are.
not to go under at the last second.
I don't know, man.
The money they borrowed is for the depositors. They did not borrow money to shore up their own books.
I understand that.
And so
I
that's
understand that.
why they were going down.
But they're a damn bank.
Well, I don't know why you think banks can't fail.
No, it's not about banks not failing. It's not about banks not failing. Their main purpose is money in, money out, right? Money in, money out, whether it's to a VC or whether it's to a regular customer. Money went out via the Fed, right? So like, and then you're good. There's no,
there can't
no risk on the bonds.
money they borrowed from the Fed. They can't use for their own books. The money they borrowed from the Fed is simply to cover the deposits.
I get it.
Then why do you think all of a sudden they could use it to shore up their own books? If they were going under because of their crappy ass management, they were going under. And especially if people are selling off and don't want to reinvest in the company. That's it.
Forrest, talk to me.
I gotta go with Robin on this one. I think it just
Trader.
You're going to lose so many depositors already. So you get I don't know what the right word to call it is. A bailout. You know, it's not technically a bailout, but if you get covered by the FDIC or the Fed. And that liquidity is backstopped, and they're basically just taking on all of the liquidity duration, as you just described. Who's going to put their money back in there? I believe the FDIC only has so much money, and then ultimately, if I'm a SVB customer, I'm just moving banks. I think there's a big move to, and I don't know if you saw the video with Janet Yellen where she just couldn't answer this question.
Oh, we got that video
essentially
queued up for later.
Sweet, yeah. I mean, essentially, I think this is about moving depositors into they don't even care if SVB exists. Ultimately, this is about a move to move more money into the larger banks and concentrate money into banks that are too big to fail. I think it'll make a little bit more sense when we do watch that video later on with Janet Yellen.
You know what, Forrest? Let's just watch the video now.
Love Janet Yellen.
I thought you were going to say I love Forrest. I was like, I love you, Forrest. Don't worry. Robin doesn't love anyone except his cat and his bird. Maybe his kids. I think he loves his kids. I'm pretty sure he does, but I could be wrong. Okay, so this is Madam Secretary Janet Yellen. Okay, let's just.
Don't have time. I need to be able to drill in on a couple of things. Let me start with some of the banking issues we're dealing with on it. Will the deposits in every community bank in Oklahoma, regardless of their size, be fully insured now? Are they fully recovered? Every bank, every community bank in Oklahoma, regardless of the size of the deposit, will they get the same treatment that SVBP just got or Signature Bank just got?
A bank only gets that treatment if a majority of the FDIC board, a supermajority of the Fed board, and I, in consultation with the president, determine that the failure to protect uninsured depositors would create systemic risk and significant economic and financial consequences.
So what is
And
your
we
plan?
made that determination.
Right. So
these
what is
two
your
banks.
plan to keep large depositors from moving their funds out of community banks into the big banks? We have seen the mergers of banks over the past decade. I'm concerned you're about to accelerate that by encouraging anyone who has a large deposit in a community bank to say, we're not going to make you whole, but if you go to one of our preferred banks, we will make you whole at that point.
Look, I mean, that's certainly not something that we're encouraging.
That is happening right now.
That is happening because depositors are concerned about the bank failures that have happened and whether or not other banks could also
No,
fail.
it's happening
And
because you're
it's-
fully insured no matter what the amount is. If you're in a big bank, you're not fully insured if you're in a
She's, I'm gonna speak real quick. She's explaining what is gonna happen, but it's literally happening already. That's the funny part. Like you're talking about what could happen. It's happening. It's going on, literally right now.
community
No.
bank.
Well, you're not fully insured. And
You
the big-
were at Signature, and
the
it
big-
just barely met that threshold. You were at Signature.
Well, we felt that there was a serious risk of contagion that could have brought down and triggered runs on many banks. And that's something, given that our judgment is that the banking system overall is safe and sound, depositors should have confidence in the system, and we took these actions.
So there's a
to
special
discourage
assessment that's been done
contagion.
on community banks in my state and all banks across the country. Was there any discussion that that special assessment would only apply to the larger banks, or was it always assumed the special assessment would cover every bank, including rural banks in my state?
I think, I'm not certain what the rules are around that. That's for the FDIC to determine.
It has been reported publicly that SVB had a large number of Chinese investors that are there, including some that were companies directly connected to the Chinese Communist Party. Will those individuals, companies, entities, and investors that are Chinese investors be made whole based on assessments in my banks in Oklahoma? So what I'm asking is, will my banks in Oklahoma pay a special assessment to be able to make Chinese investors whole from Silicon Valley Bank?
Uninsured investors will be made whole in that bank, and I suppose that could include foreign depositors, but I don't believe there's any legal basis to discriminate among uninsured.
I get it, but I'm
depositors.
just saying my community banks are going to pay this additional fee. It is always fascinating to me as well, the conversation that taxpayers are being made whole in this, that taxpayers are not going to have any kind of consequence on this. I'm sure my bankers are going to be very excited to know they no longer pay taxes, and their banks no longer pay taxes. Credit unions don't pay taxes, banks do, and so they're definitely taxpayers as well, and all banks make their revenue off of rates and fees and such to their account holders, which means every Oklahoman will pay higher fees in their community bank.
We're just going to have to move on.
If we have a collapse of the banking system and its economic consequences, that will have very severe effects on banks in Oklahoma that will also be threatened.
I'm just worried about the long. I'm just worried about the long-term.
We are going to have to move
on.
on.
We're going to have to move on to, what do you think, Robin?
So the last thing she said was, if the banking system collapses, your state is screwed, right? That's essentially what she said. She's just trying to shut up the argument, saying, look, we had to do it because if the banking system collapses, all the banks you're talking about are screwed, which is interesting. It's an interesting narrative from the Treasury Secretary. Like, let that sink in. How close are we to having a full-on meltdown that takes down an entire state's rural banking system, right? And obviously, if it's just that, it's not going to be just that state. It's going to be the country and worldwide, right? Or at least countrywide. And so think about how close we are from a banking collapse. Without the Fed stepping in, how close we are from the dominoes to start falling, right? I think the dominoes started falling, they just came in and stopped that. I mean, with the form of printing and borrowing. $300 billion was injected into the market, printed, aka over the past weekend, 3 days. $300 billion. 160 of it went straight to the three banks that we mentioned. The other 120, I don't exactly know where those went, but
Forrest.
Crazy.
Forrest Shirth.
I'm sorry?
Nope.
Hello? Forrest?
You muted there?
Hey, can you hear me?
Oh, sorry. Yeah. Sorry. I was like,
Yeah.
I thought I was muted for a second. Well, what are your thoughts, bro? Obviously.
Yeah, so the banking system is collapsing. I mean, ultimately, how do you stop this without printing more money? You don't. So either the banking system collapses or the taxpayers pay for it through inflationary measures. And I think ultimately that's a large part of why we've seen some risk assets pump a little bit. It's particularly Bitcoin, which offers an alternate solution to the banking system. You have a situation where there's a lot of volatility, and the actual collapse of the banking system could be extraordinarily painful for most asset classes. Who wants to take on risk investments when the banking system's going under or being bailed out through the printing of a ridiculous amount of money? So I think it's important that you do, despite the fact that you want to be net short the dollar, right? Ultimately, this is just bad for the dollar, which is technically good for real or risk assets like commodities, potentially crypto, even some certain stocks and whatnot. Ultimately, I think what's going to happen is we're going to get a situation where deposits and power is going to be concentrated among the largest banks for a period of time. Out of that, you'll probably see a CBD system emerge, and you'll kind of see the merging of the central bank with some of these larger preferred banks. You'll probably have a CBDC, some sort of central bank coin. It may even go as far as maybe we'll have JP Morgan coin. Maybe we'll have, insert your bank name here, BNY Mellon coin. Maybe it'll just be a central bank digital currency and they all use the same coin. Maybe they'll be interchangeable. That much is uncertain. But I think we're moving quickly towards a CBDC solution. But ultimately, how do you remain long on the dollar? And if you're shorting the dollar, essentially what you're long risk assets. So that's kind of the bull case scenario. The problem is, to what degree does the banking system actually collapse? And in that process, how far, do risk assets get washed out? And do you see this big V-shaped recovery? So that's actually, personally, we can get into the charts eventually here, but that's my base case. Is I think we're going to see the markets pump. I think we'll see a large crash as banks go under or the situation deteriorates. V-shaped recovery into inflationary printing, not much unlike the COVID scenario that we saw. and then
what
ultimately
I'm concerned about is that we can shore up the banking system here in the States via printing. But this is an interconnected network that all the banks internationally, particularly the EU, Middle East, Asian banks, US, they're all interconnected. They all borrow from one another. And don't think that the contagion can be contained within a certain borders of a country, right? They're all intertwined, man. And so, sure, we can print money, we can bail out banks, but my question is if international banks start going under and governments are hesitant to print money for whatever reason, and I could see that being I could easily see that being a narrative, like, hey, we're not going to do what U.S. did. We're not going to print money. All it takes is one of the major countries to have that hardline stance and be like, we're not giving money to the banks. They failed. They messed up.
But we haven't seen that yet.
But what I'm saying is that we haven't seen any banks go under. We also haven't seen any major bailouts, with the exception of Credit Suisse. And I think we're going to see more of it, and we're going to see more banks get tested and more governments be put in a position. It's like, hey, are you going to print or are you going to let it fail? And my concern is with the interconnectedness of the banking system that we have now. If one of these giant banks go under, does that spill over to the U.S.? Is it going to be too big of a spillover that essentially the U.S. just can't print enough money fast enough to save all the banks?
You know, you brought up Credit Suisse. From Wall Street Silver, 4 major banks, including that one, Deutsche Bank, have put restrictions on their trades involving Credit Suisse. This is what happened in 2008 to Lehman in the days before they collapsed. Now, remember, Credit Suisse did get a 50 billion Swiss franc injection from the Swiss National Bank, the SNB. But Credit Suisse is listed as one of the global banks considered too big to fail.
They have over trillions of dollars of assets on their hand. Well, 50 billion ain't enough, man. It's not. Like 50 billion, that's
credit default swaps are like through the absolute roof.
The 50 billion might stop the bleeding.
But this thing's a gash.
Dude, yeah, man.
You're putting a Band-Aid on a gash.
The thing is I'm not saying they won't print more. I'm just saying that like they're gonna need to print more. They're gonna need to get more capital.
Like they got the arm chopped off right by the elbow here. And they're like, oh, just put a Band-Aid on. No, the blood's all coming out.
And so so what exposure do these other banks? What exposures do BNY Mellon and HSBC, like how much exposure do they have? Are they going to have some fallback, blowback? Is there just going to simply be people scared of the markets, right? I mean, think about it. Like what happens if you got an account at a major bank next door, the next country over, and there's all these rumors like, hey man, HSBC had a bunch of money tied over here. I mean, bank runs, man. I'm telling you that we live in the age of social media. The government can't just tamper this down and be like, everything's fine. You know how it is. Twitter is going to catch on fire. And next thing you know, you got Reuters and Reddit and Facebook. And then you got Gam over here talking about like, get your money out. Just saying, bro.
I want to show this real quick and then we'll ask Forrest for some charts here. But this is from the St. Louis Fed. Okay. So this is deposits at all commercial banks, okay? This is from a government website. $17.6 billion as of March 1st. Next one I'm going to show you is reserves of these banks. And this is at as of December 2022, $3.1 billion. So about 18 billion to 3.1 billion of deposits on hand. And of course, these are not all cash, right? It's not all cash deposits. It says highly liquid assets, highly liquid quality assets, HLQA. So that is the scenario we're in, guys. And the question was in the show today. The question was, the poll we did the bank bailouts or the banks failing, did that spark the bull run or Bitcoin? Forrest, I want to ask you, yes or no? Could it have possibly sparked the next bull market for crypto and Bitcoin?
I think it's sparking the beginnings of a bull trap. I think we're gonna go up, and then I think we're gonna go down. A lot of times these big crashes, if you take a peek at the S&P 500, like going into COVID, we were just zooming up and then bam, straight down, a V-shaped recovery. So that's my base case. Obviously, things are very, very uncertain, so that can change as new information comes out, but essentially I think there's going to be a really strong reaction to the money printer turning back on. People are going to get bullish. People are going to run out of the dollar as they expect inflation to increase again. And I think essentially a lot of these banking issues are duration based. Where they, basically have these huge unrealized losses because they bought bonds at, much lower rates and much higher premiums. And now by the Fed just jacking up interest rates, premiums have gone way, way down, and they're just not able to keep up with inflation. And you have this situation where it could be 2, 3, 4, 5 years before they realize all of the money on that. So you have a really nasty situation here where the banks are stuck with unrealized losses and holes in their balance sheets essentially for the next however long it takes for those bonds to mature. And that's essentially what happened with SVB, and other banks are in a similar situation. It just happened to be that SVB was the furthest out on that risk curve with the largest gap and the largest issue with their duration issues. And they had the least amount of hedging, interest rate hedging going on. So we're seeing the extreme outliers fall first, but it's indicative of the situation that a lot of the rest of the banking system is finding themselves in. To answer your question, up then down then back up.
No, here's my thought. To expand on what is kind of going on with the markets. So, what do we have to go off of historically? We saw something very similar in 2008. Different parameters, but if you're looking for something to maybe follow along, hey, what happened before? In 2008, during the financial crisis, where banks were essentially in risk of defaulting and going under, and the U.S. injected trillions of dollars in capital in forms of bailouts, something very similar to what we're seeing right now. In 2008, the market still kept going down for a year, and it didn't get past the highs of 2007 until 2010. And so to think that we're all of a sudden gonna just go into a bull market and NASDAQ, which follows tech stocks, more high risk on assets, that followed along with the S&P. If anything, it dipped down harder and then took a while to come, even longer to come back than the S&P 500. So if we see something similar to where we have a deep recessionary period and we have tons of capital being injected to stop the bleeding, we probably won't come out of this for at least a year, I would say.
Whoa. Listen, all I know, bro, is
I'm just going
Dow
off
is
history,
down
bro.
400 points, NASDAQ's down 1%, and Bitcoin's over 26,000.
Yeah. Well, I think the immediate. Here's the thing: a lot of people are seeing the cracks in the system, and they're getting exposure to Bitcoin. But it's not that parabolic retail. Everyone's got to jump in. Hey, Shiba Inu, Bitcoin's over 30,000. Have to buy it. That same narrative where people just were sitting on the couch, had nothing to do, and they were just airdrop money from the government. That is not now. Now, people are getting interested in crypto. People are looking to exit the banking system due to uncertainty, but it ain't enough to push us into a bull market. Not yet. Not yet.
Well, the chat disagrees. 69% said yes, while 31% said no. So, speaking of Bitcoin 26K, Forrest, please bless us with the charts. Also,
Yeah,
guys,
absolutely.
hold up.
I did,
Hold up. Wait a minute. Andre Brown's in the chat. Hola. Okay, you can continue. Sorry. What's up, Andre?
on the topic of I don't know if you're allowed to share it on this stream, but I did text you and email you a video that encapsulates the fact that there's $17 billion in deposits, only $3 billion in reserves. But again, it's got some language in it, so I don't know if you're allowed to share it. It's only 10 seconds.
Okay, how
so I
about
don't think
this?
you get a copyright strike.
You do the chart, and I'll watch the video. And but more than likely, if you send it to me, I'm assuming it's good. But of course, all things fall back on us. So I will double check it, my friend, and I'll share it.
Yeah. Okay. So let's start with S&P 500. We've got all right. We had our quadrants, right? And you know, you got to be careful not to get chopped up. But essentially, when you have this much uncertainty and volatility in the market, you probably are going to get chopped up a little bit if you're trying to stay nimble, and that's fine. So we talked about our quadrants. You know, quadrant 4 doesn't matter because you can't go back in time. Quadrant 3 would be bearish, but we did come in. Right, we moved into quadrant 3. We did come in and we made bullish divergence. Right, bullish divergence on the daily with our RSI here. So bullish divergence on the daily. We're getting a nice bounce. We're back into quadrant 2, which is a little bit more choppy, a little bit less certain, but it is certainly not nearly as bearish. We've recovered our 21-week simple moving average. We've kind of fallen back through it a little bit, but we're just back testing this downtrend line. This is, a bump and run pattern potentially, and those are usually bullish patterns. What we want to see, what we don't want to see is that, right? We don't want to see a failure to get to recover this trend line. What we do want to see is a recovery of this trend line for our third leg up in the S&P 500. If you're an Elliott Wave fan, this would be, the extension of your Elliott Wave. You can also get, what is known as a clearance pump. You could go potentially higher, but these would be kind of our structural targets here for a large pump in the S&P 500. And this has really been our base case, at least my base case for the last 3 to 4 months. If we wouldn't have revalidated here, then obviously that base case changes, when we fall below this 21-week simple moving average, but now we've revalidated. So long as we hold here, I would expect the S&P 500 at this point in time to have a strong likelihood of having one more leg upwards. And then what I start to get worried about is, some of these rate hikes that have been going on for the last year and a half to actually start kicking in. A lot of these rate hikes take a long time to actually manifest in the space. So, note that when the Fed started cutting, right, it took some time for the market to reflect that. The market doesn't react immediately. It took, a year into these cuts for inflation to actually start coming down. So the same thing works in the other direction. Yeah, the market might be a little bit quicker to react in the short term to some rate cuts and to some quantitative easing. But note that, for the inflation data to actually reflect that, and some of the longer term stuff in the market to actually reflect that can take time. So the market can be lagged in nature. So looking for a further upside in the S&P 500. Again, if we fall back below this trend line, that gets invalidated, and we want to be careful there. Looking at Bitcoin's running the show right now. And I actually want to look at Bitcoin last market cycle. Oh, I thought I had one on last market cycle carved out. That's fine. No worries. Essentially, the last bear market rally, we had our key levels here at around 5,000, 7.5. I'll mark out as well, 7.5, right? And then we expanded up to 12.5. We ended up going overshooting to like 14, but essentially, and then you have your 10K level as well, right? So if we try to draw a parallel here, we know that in a bear market rally, especially when Bitcoin's leading, is very similar to what was, what's happening right now with Bitcoin dominance increasing is very similar to what happened with Bitcoin dominance increasing back in this prior market cycle. It's alts are bleeding against Bitcoin right now, but we know we can get this just kind of reflexive expansion to the upside, and Bitcoin can move really, really quickly. People start panicking into Bitcoin for one reason or another, right? And then we get our long, slow bleed off, so to speak. So my opinion is that we've recently, if we were to draw a parallel, we're somewhere in this region, and we've recently broken through key resistance level of 25K. And these are now the levels that I want to keep track of. 30K, right? 30K, all the way up to 40K. So 40K may seem like a far away, and a lot of people have seen, people talk about 50K already. I don't want to get too out of hand, but 30 to 40K, I do think that we could have a reflexive kind of blow off top up to these levels and then calm back down as people come back to reality and trade less emotionally. But I do think there is a strong case now for a violent move upwards, and we're starting to see that come after this 21-week simple moving average test and breakout above our range. Now, be careful if we fall back below 25K and we start holding that as resistance. That's very indicative that we're probably coming back down to 20. Right, so we want to play the ranges. We're breaking out of this 25K to 20K range that we've been in for a while, probably indicating further upside. Now, this is giving us license to speculate a little bit, license to speculate in some altcoins, license to speculate within Bitcoin, license to speculate in the NFT market if that's your desired place to speculate. So I do think there will eventually be a rotation into alt, but for now, Bitcoin dominance is rising aggressively. But what we want to be very, very careful of is a bank run could start in the traditional finance space any day now, and we could get all risk assets. People are gonna regardless of inflation, people are gonna the gut instinct is always to panic into dollars, right? Panic into put money under your mattress, right? It's what do you pay your bills with, right? What do you pay your mortgage with? Dollars, right? So people have to meet these expenses in dollars. Then they're going to panic into dollars because they need dollars, right? So if they're panicking in dollars, what are they going to sell? Potentially Bitcoin and everything else to meet their dollar needs. And that's really the main advantage that dollars have over everything else in the world right now is everyone in the US at least pays their bills in dollars. So when times are tight, you're selling off assets, you're selling your car, you're selling your house, you're selling Bitcoin, you're selling crypto, you're selling stocks into dollars, and that creates this, to make sure that you have enough to get by, and that creates a panic where we could, fall at any moment. In the meantime, I'm bullish until we're proven otherwise, until we lose some of these support levels. But right now, I'm just looking for a push up to 30K. We got some pit stops along the way. Potentially 28K is an interesting resistance level. And then if we get the very bullish scenario, that would be a push up to our 40K level. And again, we've got some resistance around 38K and whatnot. But pretty straightforward there. Also, if we take our extensions, our margin pressure levels off of our most recent local low, we've broken through. I'll get rid of these easy bands a little bit. We've broken through our most recent resistance level. We've got resistance at 29K, which is in line with our 30K psychological level, very close, within $1,000, and again at around 39 to 40K. So those are our two pit stops along the way. Keeping stop losses, right? We're not I want to reiterate, we're licensed to speculate and bullish here, but what we don't want to do is we can see the drop happen really, really fast. It can slam back down if things start. So if you start hearing rumors and FUD and this bank's going down, and you start getting in a situation, USDT starts depegging, that can all of those things could potentially cause Bitcoin and other risk assets to move down in a very sharp manner. So you want to be quick to get out, but quick to get in and ride this higher, but also very quick to jump right back out. And look, if you don't, if what happens here, and I'm not suggesting anyone trade with their entire portfolio here, but potentially taking more of a trading mindset here if you're looking for some shorter term opportunities where, all right, maybe you ride this up right here and you take profits at 28 to 30K, and maybe it just continues pumping through. Okay, let's just hop back in over here, right? And we miss out on this little bit, right? We miss out on this little bit as we push through that resistance level, but then once it proves that it can push through, then we hop in and we ride it to 38 to 40K, and we don't capture 100% of the move, but we're taking some risk off at these key resistance levels. We're taking risk off if stuff starts going south and USDT depegs, or another bank goes under, or some sort of regulation is passed and it's unfavorable, because this market is very, very sensitive right now. Speaking of Bitcoin dominance, Bitcoin's kicking Ethereum's butt right now. We're losing some key support levels. I'm of the opinion that there's a strong chance we get a chance to buy a capitulation in ETH Bitcoin all the way down here, and I think that is the slam dunk trade. I think that especially moving into this kind of deadline here. I don't know exactly when the date is for the Shanghai fork. I believe it's been delayed to sometime in April. All the way until that Shanghai fork, I expect very likely downside for Ethereum. And once we get through that Shanghai fork, I think it's going to be essentially the opposite, right? The opposite of what we saw with the merge. So the merge was buy the rumor, sell the news into what was supposed to be a bullish scenario. I think this is going to be the exact opposite with the Shanghai fork, where there's a lot of FUD. There's a lot of worry that people are going to sell off large amounts of Ethereum. But what I think is ultimately going to happen after the Shanghai fork is that the amount of Ethereum being staked is probably going to increase rapidly. And you have the potential for a supply squeeze in ETH in the long term. So I want to buy any capitulation in Ethereum against Bitcoin. As supporting my theory, this is an underlying thesis that I've had for a while now. Since the S&P 500 bottomed.
Hey, Forrest, real quick.
Chart. Yep.
While the Shanghai ETH chart was still fresh, we want to get the chat's input here. There's a lot of talk about the price of ETH is going to tank after the ETH is unlocked from the beacon chain. If you think the price of Ethereum will tank after the Shanghai upgrade, put a 1. If you think the price of ETH will pump or not tank, just not tank. If it won't tank, put a 2. So if you think it'll tank, put a 1. If you don't think it'll tank, put a 2.
I'm definitely on a 2 on that, bro.
I am a 2 as well. I do not think it's going to tank. I believe Forrest is a 2 as well. I think if anything, it'll bring more money into the ecosystem and more stakers, because institutions and people are going to be like, all right, I can stake and not have to worry about, when can I withdraw my money? I think that's something that people...
I'm not interested in staking in a platform if it's locked up for an indefinite period of time. I'm just going to be like,
especially
nah,
with ETH.
I'm good. And so if I'm looking for staking returns, I'll just go elsewhere to another chain.
Yeah.
Also, guys, let's hit that like button. What y'all doing? Hit the likes up, please. Thank you.
Sorry, Forrest.
Go ahead.
Yeah, so I mean, look, if you're in the camp that Ethereum is going to crash in price because of this Shanghai fork, it may flash crash because people are fearful. It may flash crash because some people do withdraw and sell some ETH. But in the long term, look at the staking ratio compared to other coins. Now, BNB is weird. BNB, I've seen this fluctuate wildly. I think it's much, much higher in all actuality. So I would ignore BNB chain being down at 15%. The other day I looked at it, it was like 97%. But Cardano, like 69% of the supply of Cardano is staked, right? 70% for Solana, 40% for Polygon, 50% for Polkadot, 54% for Avalanche. Look at Cosmos up at 62%, right? So even if we only achieve a 40% staking ratio, the case for being worried that Ethereum is just going to crash is that you're saying that this staking ratio is just going to dramatically plummet to like below 10%. I just don't buy that. Maybe for a very short period of time it plummets to 10%, and then more people start staking, and then it runs up to 40%. So the risk is pretty short term, in my opinion, on this particular event. So I actually think it's going to have the opposite effect. I think more people are going to stake. I think we're going to get to 40+% staking ratio and have a supply squeeze and probably see 3,000, 4,000, 5,000 Ethereum in the next year or two.
Yeah, I agree. And in our video, by the way, guys, if you want to know about the Shanghai upgrade, it's not just staking unlocks. It's more than that. We did a video on that a couple weeks ago. Very good. We talked about exactly what Forrest brought up. Staking on Cardano, the ratio, and Solana, and ETH, where it's at, where it can get to, and how that can affect price. So make sure if you want to learn more, go check that out. But Forrest, I apologize. I know you were showing a chart, I believe, on the traditional markets or whatever.
Yeah.
Is that
So
10-year?
this is the yield curve. Yeah, this is the yield curve. Below this green level is below zero. That means the yield curve is inverted. It's been a great, as good of an indicator as you can find for predicting recession and large drawdowns in the S&P 500. And you'll note, and I've brought this up many, many times, but I just want to reiterate because it is important that when the yield curve actually bottoms is when the top is either in or not in yet. right? So this is supportive of the fact that now that the yield curve has very clearly or very likely bottomed, we're spiking here. I'll zoom in so people can see this a little bit. The yield curve now spiking up as the people are expecting, or the market's expecting, the Fed to pivot and us to return to quantitative easing to some degree. The idea here is that if what we've seen in the past is any indication, that the top for the S&P 500 may not actually be in yet. Right. So we could potentially have, and again, this is where the markets are lagged, right? People have been predicting a recession since this entire year, and we could be 3-6 months out from the actual crash occurring, right? So again, even with COVID here, we barely inverted, right? But the bottom of the yield curve, we still had a few months of very good price action moving up rapidly for the S&P 500, and then we spiked down. So I'm of the opinion that we very likely do see that drawdown like we've seen all other times the yield curve is inverted. But again, the case is that in the meantime, this move into quantitative easing could make the markets hopeful, push the market up, and then before pushing it back down, and maybe we see something like that. So that is kind of illustrating my base case a little bit. Otherwise, I think you just have to be super nimble. You got to pay attention. You got to be willing to get in and get out. Don't worry about getting too chopped up. I do think it's really important to have 25% plus stable coins set on the side over the next year or so to buy any large capitulations. Anything that, all of a sudden there's a big panic in Bitcoin down to these green easy bands, this 12, 14K region, even 15K, we want to buy that aggressively, and we want to have capital set aside to buy that aggressively. Likewise, we also want to be of the mind that we trim and take some profits up here between 30 and 40K for Bitcoin if we see those levels, and we don't worry about the rampant speculation that's very likely going to happen. Remember, when people panic, they have to move back into dollars, right? They have to move it back into dollars, and in order to move back into dollars, prices of risk assets have to crash to some degree. So that's how you get these flash crashes where you can really take advantage of buying fear. Otherwise, happy to cover any additional charts, but that's most of what I've got.
Love it.
If there's an altcoin people want to look at. The altcoin dominance. We're seeing altcoin dominance drop, right? Over here. Bitcoin dominance rising. I know I kind of mentioned it, but just wanted to illustrate Bitcoin dominance is rising. And we potentially have a little bit further to go before we get to that key resistance here at around 48% that we've seen for Bitcoin dominance. So once Bitcoin tags that, maybe it gets some resistance and we get a nice little altcoin run. Again, that would be our support level over here on altcoin dominance, which is this line. We get a little bounce. So maybe a little ways to go before alts start running, if they do at all. But Bitcoin running the show right now.
Yeah, Bitcoin dominance is at 45.3%. We've discussed this numerous times on our show, whether we think or people think Bitcoin dominance can get back to 50% again ever. And with this banking crisis, I think that answer is yes, it can. Forrest, let's cover some news, and then we'll look at the chart. We'll kind of go back and forth. So first piece of news I want to cover is Polygon. Polygon Matic, one of our favorite projects. Will Polygon benefit from the upcoming ZK EVM launch? The wait is coming to an end soon, as the much talked about launch of Polygon Matic ZK EVM is just 10 days away. Ahead of the launch, Polygon recently announced that its ZK EVM started supporting Etherscan. As per the official data, there have been more than 148,000 transactions on the ZK so far, and its average block time was 1.3 minutes. Moreover, the total number of wallet addresses also exceeded 29K, and the average cost was 0.000084 cents. So we know ZK narrative is pretty popular. Also, some news from Polygon Matic. They teamed up with Salesforce, the largest CRM company, software as a service company, over $30 billion in revenue per year. This is huge. When it comes to software as a service companies, Salesforce is the cream of the crop. The CRM software firm focuses on a suite of tools that standardizes customer engagement for large firms and is now adding NFTs to their scope courtesy of a partnership with the Polygon blockchain. The news represents another big box enterprise win for Polygon. They've just been absolutely crushing it on these partnerships. Salesforce is the biggest software as a service company on a U.S. stock exchange to date, leading the pack over other recognizable providers like Adobe, Intuit, and Shopify. And this is a tweet from Ryan Wyatt, who works at Polygon. We are excited to share that Salesforce has launched on Polygon. Salesforce will help their clients onboard to Polygon with its management platform to help its client create token-based loyalty programs. We've seen the similar with Reddit. We've seen the similar, well, not Reddit, Starbucks. So, Forrest, or I'm going to ask Robin first, and then we'll go to you, Forrest, for your opinion on the chart. Robin, what are your thoughts on Salesforce is massive. You might not have heard of it, but from a business perspective, it's huge. How big is this partnership? And just
I think it's right on par with the other partnerships they had. I mean, they're just getting victory after victory, right? I mean, Disney's huge.
Starbucks,
Starbucks,
Nike.
Yeah. So the list goes on, and yet another. But this is on. What was all the other partnerships? All the other partnerships were essentially
kind of similar,
kind of like digital retail, kind of. And then Nike,
Starbucks is similar. The loyalty.
But they're all in the retail sector, so I feel like they're leveraging Polygon, or the idea is that they would leverage Polygon to assist in their retail sector. Now, Salesforce is more of an institution service, offering services, and so I think this is more tailored to what smart contracts facilitate, right? I think this is going to expand the operations of Salesforce. I think Salesforce is going to be pleasantly surprised to see what they can do with smart contracts and how much more efficient their business model will be using it.
Dude.
And if they get even bigger than they are now, and they end up being the go-to, which they already kind of are the go-to in the industry.
No, they are. They're the gold standard.
They keep extending the gap, and it's a service not that you would like to have, but that you have to have. If that ends up being the norm, and their operations are just intertwined with crypto, then other companies are going to see this and be like, look, this is not if we want to compete, if we want to be the next Salesforce, or even a parallel company,
we have to do something.
Yeah,
similar.
We have to integrate crypto. Look how much more efficient. Look how much more effective this is. Look how much the profit margins are expanding, or whatever it is. That can be done with crypto and blockchain versus the legacy way of doing it. So
let me tell you, if you own a business that has customers, you cannot do without a CRM. I'm sorry, and Salesforce is number one. Forrest, share your thoughts, and please, if you would like to take a look at a chart, we'd love to look at it.
Yeah, so this is why you hold Polygon. You hold Matic because they just make big partnerships and integrate the Web 2 giants. It's that simple. That has been the play for Polygon. ZK EVM, I could care less about it. I do think that it could spark a ZK narrative, but the alpha or the beta for that is, and the play for that is just to go for other ZK stuff. So Polygon will, probably do well. It's got ZK attached to the name. Then you just look for alternative ZK plays that are, lower cap, that are going to pump more. Look, if I ask my wife what's more bullish, Polygon launching ZK EVM or Polygon partnering with Salesforce, one of the largest SaaS companies in the world, she doesn't know anything about ZK EVM. She doesn't know a lot about stocks. It's probably representative of the average investor. The average investor has no clue what ZK EVM is. It's going to be simplified to the idea that, hey, look, it's going to make Polygon go faster or whatever, be more scalable. But that narrative is pretty boring. But people can really wrap their minds around a partnership and network effect that Salesforce can have on a crypto company. So going into the chart here, Matic has been super simple. It's been trading according to psychological levels so cleanly. So we had our bounce here at 75 cents, resistance at $1. right? Ended up topping out around $1.50. That's where I entered my short that we talked about. I closed that short around $1.12. Opened the long down at 99 cents, which is right under our dollar level, and we're getting resistance at 125. I want to get that 1.25 correctly because I'm pretty sure it did tap 125. It came really, really close, 124.43, depending on what exchange you're on. You might have gone up to 125. So I'm still in that long personally from 99 cents. I feel very comfortable with it. Could have closed it at 125, but I bullish until proven otherwise. Got a good entry point. So I think the next level is to keep in mind. Again, we've now held support on top of our prior range. So we revisited, held support on top of our prior range. We are now ranging between $1 and $1.25, right? But we've made a higher low, a higher high. We're looking for extension to retest 150. We get through 150. Our next target is $2, which is quite simply a key prior level from the bull market. So
are you a seller at $2
look, Matic,
for us?
What's up?
Are you shorting at $2?
Depends. Definitely cut my long. $3 was the all-time high. It really depends on where Bitcoin's at and how things look for Bitcoin. But potentially shorting at $2. This could certainly go to all-time highs here if Bitcoin runs to 40K. But yeah, I mean, ultimately that would be our next extension. It would be quite strong resistance. So I don't think that's a bad idea to have a short in at around $2. Just gotta be careful when things start moving in these second and third legs. With these resistance levels, you really got to lower your leverage amount, because if you go to like literally anything, right? If you were shorting, 250 as your psychological resistance level, we wicked all the way up to 271, which doesn't seem like a lot, doesn't look like a lot on the chart, but that's just 8% wick. Although ultimately 250 was the really strong support that it couldn't sustain price up above, right? Same thing over here, like you had a deviation, but 250 was the resistance, but you can get taken out on a deviation above. So those are all things to keep in mind. If we pop up above $2 and then we fall back below and hold it as resistance, then sure. I'll look to short $2, but for right now, the plan is just to cut the long at $2 if we can make it there.
Okay. Guys, are you bullish on Polygon? Put a 1 in the chat if you're bullish on Polygon. Put a 2 if you're not, for some strange and odd, weird reason. We're staying in the Ethereum ecosystem, but we're moving from Polygon, and we're going to, of course, I can argue, the most anticipated airdrop ever. You know what I'm talking about?
Arbitrum. Yeah.
That's right, baby. Arbitrum. So, some news. Arbitrum listings have already been confirmed by major crypto exchanges. So yesterday we covered news that the official token airdrop of the ARB token is March 23rd. So in T-minus 6 days. So this news, a day after the official announcement of the airdrop of Arbitrum tokens, major crypto exchanges Huobi and MEXC announced the listing of the token on both venues. ARB will be listed on March 23rd, the exact day of the airdrop. Robin, do you think more exchanges are going to kind of follow suit, or you think you think MEXC and Huobi are jumping the gun? What are your thoughts here?
No, I think most exchanges will have it. We've seen with these big airdrops that they're immediately listed on the big ones. ICP, ApeCoin, these all of a sudden were on every exchange the day of, and I think because of the anticipation, you'll probably see the same thing here on this one, and especially since it's on the Ethereum network, and it's a governance token, so it's not like a new chain, trying to offer services that are kind of murky or confusing. I think that there's little risk for the exchanges to list it. It's pretty transparent. I know that they know what they're going to get. And a lot of anticipation, so the markets are going to want to buy and sell it, and that's how the exchanges make money. So, yeah.
Forrest, what does the Arbitrum chart tell us? I'm kidding, of course. So we talked about this yesterday. We did a poll. When Arbitrum, when the token drops, right, when it first comes out, what are you anticipating the market cap to be?
This fool's saying $1 to $3 billion.
$1 to $3 billion.
You're tripping, bro. It's not going to be $1 to $3 billion.
Fully diluted, I'm expecting 5 to 15 billion. Probably closer to 10 billion. Believe, like, if we, I want to look
Eat that,
at what
I'm
fully
trying
diluted
to explain to
valuation.
him. I'm trying to explain to Robin, dude.
And
OP came out with like what, a $2-3 billion MC, and Arbitrum's got double the DeFi, got double the protocols, got double everything. It's the most anticipated token airdrop. Yes, there's going to be a sell-off, of course, but when it first comes out, that valuation, in my opinion, is going to be $1 to $3 billion. And I thought I was aiming a little lower.
Well, no. Here's the fully diluted market cap of Optimism is 10 billion, but its current market cap is 500 million. Is 800 million.
Okay, what about just circulating for us? What do you think? You think it's going to be a fifth of that?
I don't know fully what the circulating supply is going to be on launch. I think it's going to be low, like really low, similar to Optimism. But market cap is ultimately irrelevant. You want to look at fully diluted valuation, and these really low supply tokens, low circulating supply tokens like Optimism, can pump super, super hard, like irrationally hard at the beginning because the supply is so low, and then inflation comes in and just crashes the price. So expecting a big pump. I would expect like a bunch of people to sell off their airdrops around $1, see it crash down to like 50 to 75 cents. Gets bid right back up. It probably runs to $2, which would be a $20 billion fully diluted valuation, and that's probably where it peaks and where you want to dump. So I'll be dumping around $2.
Will you be looking? Will you be looking to buy any ARB tokens?
If it drops low enough, if it early enough, like if it, let's just say it launches at $1 and it crashes to like 30 to 50 cents, yeah, I'll buy. Because I think it's going to pump to $2.
I know
or at least like $1.50 to $2.
I know you were participating in their ecosystem. Are you? And if you don't mind, if you don't want to share, you don't have to. But did you end up getting? Are you getting an airdrop?
Yeah, I'm getting an airdrop of about 5,800 tokens. I expect them to be worth around $1 a piece. A lot of people in Sistine Research got that airdrop because we had a step-by-step airdrop guide. Literally 6 steps. Do these 6 things, as early as possible. Before the cutoff date. We didn't know the cutoff date in real time, but you just, step by step, do these things, and you're maximizing your shot at getting an airdrop. And that's the entire goal of that airdrop section, is to help people more than pay for the cost of Sistine Research. So that we have a lot of people in the Discord that are getting nice little paydays here, assuming it launches at a decent price.
Yeah, guys, and it literally was a step by step. Do this now. Do this now. Do this, and this. And so if you want, and that those are things, because I was getting ready to do an airdrop video, and there's so much information out there. Like, you guys won't believe how much time it takes to sort through everything and come up with a list of what to do, a step-by-step guide. So Forrest does all that through his Sistine Research. I would recommend, if you are serious about crypto, it's amazing information. If you want to support our channel, if you want to support Forrest's channel, there's a link in the description of this video. Would definitely recommend you guys check it out. He posts very frequently. You get access to Discord. Some really, really good stuff, man. And it's not just the ARB token. You have the airdrop. You have like an airdrop section. So this is how people
there's
like
the
ApeCoin thing. How many tens of thousands of dollars did people get from ApeCoin? Or maybe ApeCoin's not the best because you had to hold their NFT, but all these other token airdrops that everyone's like, yeah, I just got airdrop 10K, 20K. You would have never known about it, or you probably never heard or never knew what to do. Well, there's people out there like Forrest who do the research for you. And there you go. Go ahead, Robin. What were you going to say?
I just want to give a little love to the chat. So we do have some new people here. We have New Crypto, who's new here as well. Sandusky's Tight Ends.
Oh, God.
YF Crypto, Andre Brown, Johnny Jackhammer. We got Pedro, Randy A, Manny Lingo, Kenneth Stay Golden, and Uncle Candles. To all of you, hola! Welcome to Sin City Crypto.
Is that Frankie Candle's uncle?
Maybe.
Uncle Candle.
Maybe.
What are your thoughts on? I'm seeing a lot of Arbitrum. People aren't a fan of their tokenomics. People are saying it's way too centralized. Have you? Well, what do you? Have you done any digging into that for us? You want any insight you want to share with us?
I've seen that like 44% is going to the team, which is ridiculous. It's only governance, so fees aren't paid for it, so it doesn't have a really tight value accrual mechanism. At the end of the day, when it launches, it's not going to matter. You see DYDX, they have had horrible tokenomics and really bad inflation, and they're just a governance token. Look, it to some degree, it's not going to matter. People are going to speculate on it. They're going to feel that it should deserve similar valuation to Optimism. There's certain things about that token that can change in the future. Governance is still decent utility, even though it's not a value accrual mechanism. I still expect a pump in the short term. I'd be surprised if it doesn't at one point in the first few months, as long as there's bullish conditions in the market, pump to $2 for a brief period of time, or $1.50, just given where Optimism's at. Like, just for comparison, Optimism has under $1 billion in TVL, 963 million, and Arbitrum has about double that, or about 1.8 billion in TVL. So basically it has double the TVL, and Optimism's at a fully diluted valuation of 10 billion. So I think the market in a short-term pump is going to be able to rationalize a $15 to $20 billion valuation for at least a brief moment in time. So I still think it'll pump. Do I think it's like something that you want to buy and hold for the long term? Absolutely not. I'll actually be looking to short if there's the availability to do so, if it gets up to something crazy like $3 or $4.
Yeah, I think you got a point, man. We sit here and like, oh, tokenomics are this and that, but at the end of the day, like if people want to invest in it, they're going to invest in it. Majority of people don't look at, their tokenomics, or they're centralized. Like, oh, Arbitrum, cool, 2 billion in DeFi, yeah, let me buy it. They don't even look at the tokenomics. I want to talk about a project that's not doing so hot, and that is Helium. The HNT keeps falling after Binance, and Forrest, I'm probably going to ask you for a chart on this one, by the way. HNT keeps falling after Binance said it will delist the token. This is sourced from crypto.news. So Binance.us and Binance, the global exchange, have recently announced they would delist the HNT token, given the upcoming migration to Solana. The migration from Helium to Solana is significant and a first for the industry. The foundation has confirmed that the migration will take place on March 27th. Not sure the conclusion, if they're trying to draw the conclusion that Binance delisted it because it's going to Solana. Not sure, but either way, the largest exchange in the world is delisting a former top 30 project. And where is it at now? Let's take a look. Where is HNT at now?
You want me to pull up the chart?
Helium token is number 150. Damn, this thing is getting destroyed. So, Robin, that's Forrest. That was mine. Okay, there you go. I guess, Forrest, I can go to you first since you have it pulled up there. Kind of talk us through this. What do you think? Is Helium a dead project? What are your thoughts? Obviously, it's not good when the largest exchange delists you. But do you think this has much to do with them going to Solana? You think something's changed? Like, what are your thoughts here?
Yeah, a couple things. So basically, when they change to Solana, it becomes, I believe, an SPL token. So SPL tokens are similar to ERC20 tokens on Ethereum. So the actual infrastructure for it has to be, I believe, when they change it, like, it has to be delisted, and it's more a matter of do they bother relisting it? And ultimately, the question is, are they going to put in the work and the time and the money towards relisting it as an SPL token, which SPL tokens, with Solana being down in the dumps, don't have a ton of trade volume. So ultimately, if interest in HNT pops back up, I'm sure they would go through the trouble of relisting it in the future. But yeah, it just depends. The big problem with HNT is they have this big network, but they don't have any users. I do believe, though, that they have partnerships with the Solana phone potentially, and potentially a partnership with Dish Network and or T-Mobile. So they could potentially start bringing in some revenue. It's unclear. I think it's incredibly risky to be buying something like this at this point in time. Look, if you wanted to speculate on it, it is very low in price, and maybe it bounces back. I mean, we've seen bounce backs happen before, but it being delisted from exchanges is not a great look. And then you go over and you take a look at its circulating supply versus its max supply. You realize that there's still quite a bit of inflation to come. It looks like it's about 60% circulating. So like all of these helium device miners are still like earning tokens and just turning around and dumping them and pushing price back down. So we'll see if Solana makes a comeback, if the Solana phone ends up, getting any traction, if they can onboard users or create more partnerships with other, cell phone carriers, then potentially this becomes a bigger play. I know they've got their 5G network now. So look, I don't think it's worth a punt at this point in time. But if you do, I mean, now would be the time of maximum fear and capitulation to take a punt on it with a small position. It's something that you could sit on for 6 months and it goes to zero, or you could sit on it for 6 months to 2 years in the next bull market, and it's a comeback. And look, I mean, there's a lot there's a lot of potential to go up from here. Ultimately, at the depths of despair, it's down 97%. Like, look, stuff can recover from that. Look, I mean, Cardano was quote unquote a dead vaporware project by the down 99% in March of 2020. So is a comeback impossible? No, but you're just understand the risk that you're taking if you're going to go and speculate on HNT right now. You're speculating on the fact that it's going to bounce back and have success and onboard customers, and Solana, the Solana ecosystem is also going to bounce back. So just higher risk play there.
What are your thoughts, Robin? Are you a buyer of HNT at $1?
Maybe sub dollar. I'll say this. You know what? It has a big community. There is very passionate individuals that believe in the vision as well, and the idea itself is pretty innovative, right? I mean, nobody else is doing this. They're offering.
But is there a reason no one else is doing it?
Well, maybe there's a reason no one else isn't doing it. I mean, maybe there's a reason people aren't doing it. I think, you know what I mean? Maybe. I don't think you need a reason. Sometimes you just need a reason not
that people aren't doing it for not doing it.
No, I mean, honestly, like sometimes you're just like, hey, why would we do it if it's easier and cheaper and more efficient to do it the legacy way? Now, if there was nothing wrong with the financial system, would you need Bitcoin or would you need a payment system? Would you need if the Swift system was efficient, there wasn't any intermediaries, and money just moved naturally for pennies at the speed of light, then you wouldn't need XRP and you wouldn't need Stellar. But that's not the fact. But so for me, I'm like, do we need internet to be broadcasted? Is it more efficient, or is the systems that we have now sufficient? And it's not doesn't need to be drastically upgraded. Now, with that said, hey, you have the idea that, hey, I can run my own network with the assistance of other people, and then instead of paying an exorbitant amount of money to the cable company, pay $100, $200. That's one of my biggest bills is my internet bill.
Yeah,
and if instead of paying for an internet bill, I run it essentially for pennies, and then potentially can make money at the same time, and if it's a comparable product, then that's a no-brainer. But that hasn't played out that way. And from my understanding, you don't get the speeds comparable to or traditional cable internet. And then you're 100% reliant on the community. So if not every, if you're in an area that isn't saturated with the other HNT miners, then it doesn't really work. So I don't know. I think it's worth a shot. I just think that all-time highs were, it grazed $50, but realistically, it probably would traded mostly between 20 and 30, and at $1.50, that's a 20x. I think for the risk return, it's not that juicy of a return seeing the direction it's going and the risk. And so maybe under $1, I think it might be worth a little allocation. I still like the project. I still like what it's doing. And maybe 80 cents or 70 cents. After ICO it was 40 cents, 50 cents. So, I mean, I think it can get there. And then maybe a little 0.5% portfolio, little sprinkle of investment.
Here's the issue I'm seeing. So one of our community members, a couple of them, or one of them said they were making like $1.50 a day, and now they're making 20 cents. When you have a system and a token system set up to where like that, you know, you buy these routers, you use them, you get the HNT token, and then you have to sell it to make money because that's what you're doing. At some point, people are gonna be like, well, this thing's 50 cents, and I'm getting one HNT token for every 10 hours I'm online, or whatever the case may be.
Well, you had the same problem with Bitcoin miners in the early days, you know, especially in down bear markets. You know, you had people that were like, I paid $10,000 for this damn miner, or $5,000 or $3,000 or whatever it was, or $1,000 laptop. And then you're like, and I'm selling these Bitcoins for you know, I just mined 3 Bitcoin and only got $80 for it. Like,
okay,
like I'm operating in a loss here. You know, if this thing comes back, it's golden. And I don't think the incentive of this project or the incentive of the miners is to make money by running it. You get paid out on that. The idea here is that, hey, I can have cheap ass internet, and then my neighbor's gonna have cheap internet. And I think that's kind of like the idea, not, hey, buy the miner and then all of a sudden you're gonna be rich. Like, I don't think that's really the premise of their kind of strategy there. It's more like, hey, I participate in the network, I get bandwidth, you get bandwidth, I save $1.
We all get bandwidth. Yeah. You know what we all also get is pixie dust. So Forrest, the video you sent me, I'm gonna play it. One of my favorite movies. So we're talking about the banking and what bank is and what your money is. Well, here's what it is. Brought to you by none other than the man himself, Matthew McConaughey.
Fairy dust. It doesn't exist. It's never landed. It is no matter. Fairy dust. It doesn't exist. It's never landed. It is no matter. It's not on the elemental chart. It's not fucking real. Right?
Not effing real.
Fairy
Pixie
dust.
dust.
It doesn't exist.
Yet, Bitcoin is pixie.
17 billion deposits, 3 billion in reserves was the chart that the money's not there. It's not real.
It's somewhere. It's just not in the bank. That is a system we are playing in, but fear not, because unlike in 2008, when everything started collapsing, we had no outlet. This time around, we will have an outlet, and that outlet is Bitcoin and cryptocurrency. With that being said, Forrest, before we let you go, my friend, anything you want to leave us with? Anything happening in the land of Sistine and Ute Street and Forest Land?
Yeah, Bitcoin DeGods mint today on Bitcoin ordinals. It's going to be extraordinarily competitive. They're minting at a price of 0.33 Bitcoin. I think there's only 500 of them. I expect it to sell out in like a minute or two.
Hold on, 0.33 Bitcoin?
Yeah, it's actually cheap because DeGods are what, $12,000, $12,000, 0.33 Bitcoins, like 8 or 9 grand. So you're getting a discount. Damn. So you're getting, you know, immediate. If you can mint it, you're getting like an immediate $1,000 in upside. And they'll probably pump because there's only 500 of them on Bitcoin. So look, I mean, we're covering it in the Sistine Research Hub, kind of play by play. I don't expect many of us are going to be able to get one. It's going to sell out ridiculously fast. But yeah, that's the big one for today. And otherwise, everything that I talked about with the market, just make sure you're ready for this thing to crash at any given time. But until it does, just enjoy the upside. And have some stables on hand. Don't get greedy. Don't get piggish. Enjoy the ride up and secure profits.
There's a saying: pigs get fat, hogs get slaughtered. I'm sure you guys have all heard that saying. Have you heard that saying, Robin?
Bacon.
Beautiful. Forrest, thank you so much for joining us. We love having you on as always, my friend. We will see you. I'm excited for your Monday video. Who knows what's going to happen over the weekend? And Forrest, enjoy your weekend. And I look forward to seeing you in exactly 1 month from today. You excited, bro? I'm stoked, man.
Oh, yeah.
And we're going to be there longer. We're going to... I'm saying we do a slumber party. What do you guys say? Some board games?
Yeah, absolutely. I'm down.
All right, brother. Thank you so much, bro. Have a good weekend, man. We'll see you next week.
See you guys. Peace. Thanks for having me on.
Thank you, bro.
Take care.
Man, you guys, if you're not subscribed to Forrest, go do it, man. He's a good dude. He's got a lot of great insight. Spends a lot of time researching stuff that a lot of people don't, like token airdrops, how to do those things. And so really great insight. You never want to be in this echo chamber of, oh, I'm only listening to this channel because they only talk about XRP, or I'm only listening to Charles Hoskinson because he only talks about ADA. You want to expand your echo chamber of people you listen to. You want to hear some things you don't agree with. You want to hear some things you do agree with. So it's important to do that. But with that being said, we are done. Finito. Where is Jimmy? Jimmy, where was Crypto Bailey? I'm going to text these mofos after I get off the show. This is unacceptable.
You miss him? You miss him? I feel like Jimmy for sure is drinking right now. He's like, St. Patrick's Day is like, it's like America's greatest holiday. Like, it's not American. I'm like, oh, yes, it is.
Literally named after an Irish saint. If you are from the great land of Ireland, I bid you a warm St. Paddy's Day. All jokes aside, happy St. Paddy's Day. I'm not sure if you guys celebrate or not, but I wore green. I'm the only mofo that wore green. Rocco's got green socks, but I don't know if that counts. I guess it counts. With that being said,
why doesn't count?
I'm saying it
The
counts.
underwear is okay.
I had to think real quick.
Okay.
And then I was like, all right, it counts.
We do got some scotch back there. If you want
There
to.
we go. Take a shot.
Hell no, bro. Are you crazy? All right, open it up. Anyways, guys, go follow us on Twitter, all of our social medias. We're on TikTok, we're on Instagram. We do a lot of YouTube shorts. Also, go watch the ETH Shanghai video. We've done some content specific. We've done an ISO video that's doing pretty good. If you want to learn more about ISO, what tokens, also go get some merch for yourself. Don't be cheap.
And then also Tech Gamer and Kevin B, A-Train, TJ. Hola!
Also, Stay Golden said, is Forrest related to Coin Bureau? I don't think so. Or else we would have already had Coin Bureau on the show. Anyways, guys, Rocco.
Yes.
Guys, I'm not going to do the friends family thing. I just want to tell you that thank you for spending your week with us. To all the new people, come back. Make sure to watch Big Rob on Sundays as he talks about shaving his cat, amongst other things. All jokes aside, it's a really good show. You guys should definitely check it out. Definitely check it out. I will be back this Monday for my TA. Hopefully I can do better than Robin did. But on behalf of myself, Robin, Kyler, Rocco, and our special guest, Big Swole up in here. Love you guys. Have a good weekend. Until next time.